Do I really? How do I sound? I'm on my phone.
Oh, now you sound better. Now you sound better.
Jeez, you gave me a panic attack.
You sound like you're ready to give legal advice, so that's perfect.
No, that's... Come on, man.
Attorney Johnny.
Good morning. Good morning, Carlo. Can you guys invite Birdinals up, please? Thank you. Or request. But
Good morning. Good morning, Jess. Good morning, everyone. Thank you for the invite.
Yeah, thanks for coming. We're excited to have you guys here. We have we have Johnny here, we have Carlo here, and we also have Jonathan who's coming up. But yeah, before we'll go around and we'll kick it off in a second. I just wanted to thank everybody for being here. Happy to be here for another episode of Crypto and Coffee. Yeah, it's Friday again. What's going on with you, Tammy? How's your week been?
My week has been busy, but it's been good. It's been good. We had some weird thunderstorms here, so they went through this morning, woke me up at about, I don't know, maybe about 5:30. So I've been up for a while, but that's good. Started my day nice and early. So how about you guys?
Can't complain. Happy to be here. Dow, where are you? Where is Dow? That's like, it's like, where's Waldo every week? Where in the world are you this week?
Oh, I'm still in Medellin, Colombia. But if I'm traveling next, I'll look for a location where they have the world coin orbs. Wherever these guys are, I need to. I'm not going to use them. I just want to see what they look like. It feels like a bad episode for Mr. Robot when they have those like global conspiracy, and it's actually coming true. So, if someone can tell us what they look like and actually see the experience, like, I'd love to hear it.
We'll see how that goes. But glad to have you back, and good to see that you're traveling in another world. I also see Andrew up here. Good morning, Andrew. How's it going?
Good morning, Jess. I'm doing well. Yourself?
Good. Andrew, what kind of coffee do you drink? I've never asked you this before, and I've known you for a long time.
I usually just put, it's like almost like decaf, like 2 creams, 2 sugar type stuff. Like I drink espressos probably once a week, but try not to drink those too much.
Hey, Tammy, you sound a little bit muffled. If you want to fix your mic. But yeah, let's go through our speakers. Today we're going to be talking about all the bills that are out. I was reading this morning. It looks like some bills got passed. I don't know. There's too many to keep up with. So we have our panel of lawyers here today. And again, nothing said here is financial or legal advice. But why don't you guys go ahead and give a little intro? And I'd also like for you to share if you are a coffee drinker and what kind of coffee do you drink?
Thanks, Jess. I'll start since I kind of instigated this. I'll start with coffee. I drink coffee religiously, I would say. It is a spiritual thing for me in the morning. Just black. It's got to be fresh, light roast. You got to use a burr grinder to get the optimum granularity. I sometimes do a pour over at about 100 degrees, 98 maybe Celsius. I might take it too far. But yeah, that's my coffee. I thought of bringing on Carlo and Birdinals because Carlo has a great space, usually on Fridays right at the end of your space, where he was kind of going through some of the legislation and my head was spinning. There's so many proposed bills. So I know both of these guys know more about it than I do, and I know a lot of people could benefit from like being more active on the policy side. So I just invited them and they were down. And Jess, thanks for hosting us. I think this is going to be a really good, informative space. Carlo or Birdinals, you want to take it off?
Oh, can I just add something really quick? And I hope you don't mind me sharing this, but like Johnny, like you and I have known each other for a few years in this space. And like you became a lawyer while you were a Web3 degen. Like, congratulations. Like, I don't know how you did it, but I think you know that we were all very proud of you. So like, to people who sit on spaces, like doing nothing all day, like you could be doing other stuff and you could be getting your shit together. So we appreciate you. And I just wanted to say congrats on that.
Oh, thank you. And this is my first space with my actual face. And
I know, I couldn't find your DM because I'm like, where is his PFP?
Yeah, I'm pulling a Carlo, although not as handsome. Carlo, why don't you introduce yourself?
Hey, Carlo.
Boy, that's a lot of pressure. GM, everybody. Yeah, I have to second it. I'm really, really proud of Johnny and what he's accomplished. He's been a regular on Lexline and always brings great insights, and so happy to welcome him to the Web3 legal community. To answer your question about coffee, I'm a French press maxi every morning, fresh ground beans. I like Dunkin' Donuts beans. I keep it simple, but definitely French press is the way to go. And I do love, of course, Italian coffees, cappuccino for sure, and espressos in the afternoon for that extra boost. I am excited to have this conversation, and I think it's an important conversation. I'm glad that you brought in Birdnalls as well. I'm going to kick it to Birdnalls to introduce himself. And he is also a regular and someone who puts out phenomenal content. If you're not subscribing to his bi-weekly, I hate to rug you, Birdnalls, but I'm going to announce it, his bi-weekly crypto law update blog, you really should, because it's the best TLDR in the space.
Love it. Welcome, Birdnalls. Birdnalls. Sorry, I'm trying to call you like Ordinals. It's Birdnalls.
Yeah, no, you can tell I'm a St. Louis guy because I got the Birdnalls going on. But yeah, so thanks for having us. It's always great to hang out with Carlo and Johnny and just talk law shit. So yeah, so I'm an attorney here in St. Louis at a firm called Polsinelli. We're a nationwide firm, like 1,000 attorneys, but I practice in primarily digital asset space, and I do a bi-weekly blog on the firm blog, and I put out a weekly update on all things like Web3 legal on a personal blog, which is kind of how I got started in this space. I kind of just started writing about subject, got some client base from that, and kind of transferred my business over to working full time, which is awesome. I love it. And then for coffee, I'm a like iced coffee, cold brew winner. I don't care if it's 0 degrees out. I'm still going iced coffee. So that's kind of my like. I don't know if that's like psychopathic move or something, but I love the iced coffee. Doesn't matter what the weather is.
So you're wearing gloves, drinking iced coffee during the winter.
Exactly.
Love it. Love it. So yeah, thank you guys for coming. Great intros and great coffee choices. Nobody said, nothing weird like gas station coffee or anything like that. So you guys can stay for the rest of the show. So thank you for passing our first test. But yeah, let's go ahead and kick it off. So yeah, obviously there's a lot of bills going out. Who wants to start it off and maybe kick it off with one that you think is the most important or that has had the most recent movement? Who wants to kick it off for us?
So I'm happy to kick off the conversation because I think it's important to set the table before we even jump into the bills to just sort of understand. I know there's a lot of debate and a lot of disagreement about whether this space needs regulation, but we just need to understand that it's inevitable. I recently discussed this and I sort of looked back because, history is a great predictor of what we can expect going forward. That saying history rhymes, doesn't repeat, but it rhymes. So I looked at a few other technological innovations throughout history, including the railroad industry, telecommunications, and the dot-com internet bubble to kind of look at really, really breakthrough innovative technologies and what followed. And inevitably what followed all of them was regulation. Regulation is essentially inevitable in this space because as we continue to grow and push the limits, we're going to attract the attention of legislators, enforcement officials, and we're going to need to have some clarity going forward. The intent of regulation is to protect consumers, and it's certainly that is the goal, to protect consumers and to have fair competition among the players. Some people worry that it's going to kill innovation, and it can kill innovation if it's done over broadly, and if it's done as it's being done right now, which is regulation by enforcement, which is why we have to circle back to and point to the legislative body to actually pass laws that are crafted to the crypto sector and to the digital asset space so that we can have meaningful legislation that protects consumers, but also fosters innovation. The other problem is that regulation historically tends to be reactive, and that's exactly what we're seeing right now. We're seeing enforcement of these regulatory bodies like the SEC aggressively doing enforcement actions as a reaction to what they're seeing going on in the space, especially with FTX. We're now seeing that from the legislative side. It's reactive because we've had these major scandals, these major criminal prosecutions coming down in the space. So now what we need to do is temper that reaction and be proactive with the legislation that we introduce. And then we have to balance, as I just alluded to, the regulation with innovation, because we don't want to over-regulate to the point that we kill the creativity, and we don't want to drive the talent overseas to countries that are more welcoming to crypto and blockchain technology, because that's the worst thing that can happen here. So I just wanted to set the table for that. Johnny, do you want me to jump in and kind of start to talk about a little bit the high level on one of the bills that's been proposed, which is the Senator Lummis bill?
We'll go over the three main bills that are on the table. By way of further setting the table, in the United States, we have our three branches, right? Most of the conversation has been on the judicial branch with the enforcement actions and the criminal action, right? This is a legislative branch. If you're not familiar with the United States, we have a bicameral system. We have a House and a Senate, okay? A bill needs to be approved by both sides, and then it goes to be signed by the president to go into law. Before it even hits the floor to be voted on, these bills are in committee. And that's kind of where we're at with most of them, just to kind of set the table. So we're still early. Some of them just got out of committee, but we're still very early. So these bills, they're not law, so don't freak out. They might sound scary. I think that's just, as far as procedurally, I just wanted to get that point out there. Carlo, why don't you kick us off with the first of the three we're going to cover?
Yeah, so one that dropped, which is a reintroduction of a bill that was previously proposed in the Senate. This is a bill that's co-sponsored by Senators Cynthia Lummis and Lummis-Gillibrand. I'm going to pin up a little bit of a TLDR that I did on this. This bill specifically caught my attention because it raised the question of whether we're going to see any expansion of the definition of dealer brokers in the space. Now, what I pinned up is a blog post that I did, which kind of provides a real bullet point of what's in the new bill. So I don't want to burn up a lot of time talking about all the specific nuances of this bill. The bill is aimed at bringing strong regulatory foundation to the digital asset space, and it prioritizes what I've already mentioned, which is consumer protection, because all of these bills are in response to what we're seeing right now, which is this really aggressive enforcement regulation climate. And of course, when we're seeing things like Celsius and FTX go down, it is only a natural response that legislators are going to hone in on this. We're trying to get a bill passed that has bipartisan support, which has been a challenge of late. For backstory, one of the things that is law, because Johnny mentioned that these are proposed bills and they're still in the works, but need to educate the space a little bit what is law. The Jobs Act passed in 2021. Joe Biden signed that into law, and the Jobs Act includes 80603, which directly impacts the digital asset space because it redefines what a digital asset broker is, and it sets requirements under two things which you're going to hear thrown around a lot in this space: KYC and AML. KYC stands for Know Your Customer, and AML stands for Anti-Money Laundering. KYC is required when you're dealing with brokers in the securities realm and in the banking sector, because whenever you have financial transactions that exceed a certain threshold, and that's generally $10,000 in excess, banks need to know who they're dealing with in those cash transactions. And what this bill is doing is it's redefining and basically categorizing, or I should say what this law, the Jobs Act, did, is it's basically treating crypto transactions of 10,000 just like cash transactions. So what does that trigger? That triggers the requirement that the people involved in the transaction have to know who they're dealing with. They have to KYC both sides of the transaction. They have to collect the name, social security number, address, contact information, and they have to have that available in the event that the government wants to know who's part of it. Because under our laws, A body called FinCEN oversees these transactions under what's known as the Bank Secrecy Act. Sounds spooky, but what that is it was a law that was created to sort of prevent money laundering, which is the movement of illegal money, hiding it to conceal the source of the money, washing the money essentially. So you can see how crypto could be a vehicle for that. So the Jobs Act takes effect, and the rules and the requirements for this whole KYC, and I should also add IRS compliance, because the IRS also has reporting requirements for these transfers of crypto assets of 10,000. That creates a situation where now you've got these obligations that are going to take effect January 1st of 2024 under the Jobs Act. And there's been a lot of criticism about this is overbroad, this was poorly written, this is just casting a very wide net, and it's obviously affecting the decentralized notion of the transactions between consumers. So one of the things in the Lummis bill is an attempt to try to slow down the implementation of that particular aspect of the Jobs Act, because if it's not going to get repealed and it's not going to get converted to new legislation, this bill is proposing let's pause and push back the effective date of 8603 to December 31st, 2025, and let's revisit the definition. One of the key things that this bill does is it sort of expands a little bit on what a broker is and does try to clarify. So they define a broker as anyone who affects the sale of crypto assets at the direction of their customer in the ordinary course or trade of business. This expands the category of individuals or entities who may be considered brokers for reporting purposes. And of course, I know everyone's wheels are turning. Do I qualify as a broker? Well, you might be considered a broker for reporting purposes if you're doing peer-to-peer trading and if you're doing other behavior in the space which effectuates the transfer of digital assets. So the reporting requirements under this bill would apply to the customer information that's collected by these platforms. And that is alarming to the space. And I can see why it would be, because obviously we've always had this dichotomy between the centralized exchanges like Coinbase and Binance, and then the more decentralized unhosted wallet side of things. And people want to protect unhosted wallets. And for those who don't know what that is, the unhosted wallets are basically like MetaMask, those providers that don't require these KYC. If you open up an account with Coinbase, you're going to have to confirm who you are. If you open up an account with MetaMask, you don't have those requirements. Where people get into hot water when it comes to crypto is because they think that all of this decentralized stuff going on MetaMask is not subject to government scrutiny. And they don't report it, and they don't KYC it. And where that can become problematic for people is that the government obviously can monitor blockchain transactions because it's all transparent. We all know how to read the chain. Coinbase requires you to KYC because in the event the government wants to know about a transaction, they're required to report that information to the government. So where does this get sticky? And I'm going to close with this as far as the big takeaway from this bill. This gets very sticky for people, and this is why they have all these concerns about KYC and AML, is because when you off-ramp your crypto from something like MetaMask and you want to convert it to fiat, which is the currency of your country, you generally have to do that through a centralized exchange like Coinbase, which then triggers compliance with KYC and AML. If there's a suspicious transaction, Coinbase may be under an obligation to report that. So now you're in the banking system at that point. You're in the FinCEN network. What people do to circumvent that, which is illegal, is they go to unlicensed money exchangers as a means of trying to avoid those KYC requirements. And as a criminal defense attorney who's really devoting a lot of my practice now to crypto especially, I'm seeing a lot more of those criminal cases coming down where people are getting charged with money laundering and with the operation under 18 USC 1960 of an unlicensed money exchanger, because they're trying to circumvent those centralized exchanges and they're trying to off-ramp their crypto in ways to avoid government detection. This is a big problem in the space, and education is critically important here. And if we don't fix this Jobs Act provision, if we don't somehow amend it, then come January 1st, there are going to be a lot of people in this sector who are doing business with crypto who are going to need to immediately get into compliance or face the potential for severe fines, civil sanctions, and even criminal prosecution in extreme situations. So that's kind of my 1,000-foot view of the Lummis bill.
Great overview, Carlo. I think if you hadn't had the coffee working its magic yet, you might need to go visit the bathroom after hearing you're going to have criminal charges for circumventing the Coinbase off-ramp. Any questions about that bill for Carlo? Anyone on the panel? Or?
Yeah, I see Andrew has his hand up. Go ahead, Andrew.
Thanks, Jess. Carlo, my question was more kind of on a broader scope. So obviously a ton of bills are being proposed. I'm not sure how many of them have passed. And obviously social media is the world's greatest amplifier. So when these bills are being quote unquote proposed, you see social media have the massive outrages, people on Twitter Spaces, behaviors out of whack. How many of these things that are being proposed that people should really kind of take into account, be aware of, care about, maybe start preparing for, or how many of them should they not be doing that for?
Well, that's an excellent question. I think the best way to be prepared is to be educated, and spaces like this are a great start. Subscribing to the blogs that the great lawyers in this space are putting out is another way to keep up, because frankly, even the lawyers in this space are having a hard time keeping up, because we're in a group DM with a bunch of crypto lawyers. It's funny, just to circle back to the whole coffee theme, that entire group DM, which I somehow got the moderation, I'm the moderator of this group, all started with an invitation at NFT NYC for coffee. And it just grew and grew and grew. But what we do is we try the best we can to update each other in that group. So yes, I think anyone who has an interest in this space, who's transacting in crypto, definitely needs to keep a close eye on what's happening in Congress right now. And it doesn't take much to tweet at your respective representative, be it in the House or in the Senate, to let them know your views about this proposed legislation. Because what's going to come out, and we're all hoping something comes out this summer, although I think we're all a bit cynical. We're starting to see some hope in this latest bill that I think Bergknalls is going to talk about eventually, that it seems to have some bipartisan hope of going forward. We have several hurdles we have to accomplish here. We got to go through both houses, Senate and the House, have to vote up or down on these things, and then they got to go to Joe Biden's desk. And President Biden, based on what we've seen so far, doesn't appear to see a lot of utility for crypto and really feels like he needs to regulate this industry harshly. So the concern is whatever does come out of Congress, will it get signed into law? And we're doing all this against an election cycle, which means that some real problems in getting things passed, because now we got a president up for re-election. So if this gets pushed up, it's only going to continue to jeopardize our foothold in blockchain technology, because with more uncertainty about regulation, we're going to have more potential prosecutions and enforcement actions and lawsuits like we're seeing right now with Coinbase, which are very disruptive to the industry. And we don't want to see innovation leave this country because we can't get our shit together.
Great question, Andrew, and great answer. I do have a question, just maybe to elaborate more, because I have heard about that $10,000, broker limit. So if I'm buying, again, this is just for example purposes, if I'm buying Pepe with ETH on Uniswap, if that law were to pass, would Uniswap in that scenario be the broker?
That's a great actually segue into the next bill that focuses on DeFi. And I can answer that at that time, or we can go to Tammy. What do you want to do, Jess?
Whatever you want. Answer, if you want to answer my question, and then we can move on. Like, who would be the broker? Go ahead, Dale.
And you buying Pepe, Jess? Really?
No, it was an example.
She's grabbing Safe Moon, Dal. That's what she's doing. She's just kind of covering it up.
Well, the next bill is the Pepe DeFi bill brought forward by AOC. I'm just kidding. Carlo, who would be the broker? Would Uniswap be the broker under the Jobs Act?
So it's a good question. And Jess, I appreciate you setting up with this is not, or Tammy, I appreciate you setting up with this is not legal advice, because nothing we're talking about here should be considered legal advice. That's an interesting question, which still remains to be debated. There's actually a lawsuit that was filed trying to declare this particular piece of this section of the legislation unconstitutional because of the implications of it. But who could it impact? Peer-to-peer transactions, crypto-to-crypto exchanges, large digital asset purchases and sales, and using crypto for the payment of goods, and as Johnny articulated, DeFi transactions could all fall into the gambit of this. Is it possible that that transaction you gave in that example would be subject to these reporting requirements? Based on my cursory reading, I think it is highly probable, and that's going to be something that's going to have to be challenged. I know Birdnall's threw up 100%, so I think Birdnall's, you agree with my assessment on that? Is that in line with what the Jobs Act looks like it would regulate?
Yeah, so it's not so much the Jobs Act as it is the Lummis-Gillibrand, and one of the things that they've had an issue with is that under a few of the other things we'll be talking about, DeFi's like explicitly talked about, and they have things like this is excluded or this is included for a study or what it is. And Lummis-Gillibrand don't really deal with DeFi as directly. They're just not as big of a bill. It's not as comprehensive as some of the other bills. So there is some unclarity when it is a DeFi and you're just interacting with a protocol that's software, and it's truly peer to peer. It's you. I'm sending something to Carlo. I don't know who Carlo is. I just know that I'm exchanging USDC for Pepe. And that would go into the reporting for the individual, and then also it's unclear whether Uniswap as the protocol would have some kind of reporting obligation. That's one of the big gripes with Lummis-Gillibrand is they don't really deal with DeFi as directly as some of the other.
One more quick question before I forget, and I guess this is a more broad question. When we're talking about digital assets in this conversation, are we talking crypto and NFTs? Like, that's just another question I have. And I know Tammy, you had your hand up. Go ahead, Bernal.
Yeah, so all the ones we'll be talking about they have carve outs for non-fungible tokens. So they have studies they said they're going to do, but these are for fungible tokens, and how digital asset is defined is a fungible token. That's not to say that you don't still have reporting obligations if you have transactions of over $10,000. And it's an NFT, you're buying a Bored Ape as opposed to $10,000 in Pepe, you still have reporting obligations. But under all these new acts, they're targeted towards fungible digital assets. In the same way, MiCA in Europe they have carve outs for NFTs.
Interesting. Tammy, I saw you had your hand up, and then we'll go to Andrew and then circle back to the speakers.
I still sound muffled.
You sound okay. Try it again.
Okay. It's probably because of the storms that came through here.
But you sound good now. Go ahead.
Oh, good. But if you guys want to go ahead and proceed, because I know you were going to segue, I can save my question till the end because it was more of a, regulation question and clarity. So if you guys want to keep going, that's fine. And I'll just save my question.
All right, Andrew, you wanted to chime in? Go ahead.
Yeah, thanks, Jess. Bertels, quick question for you. Is the reporting up to the purchaser or the broker? So that would be Uniswap or these collections in this instance.
So it's any sale or exchange of more than $10,000. So it's the person who is receiving the $10,000 in value is supposed to technically fill out I forget the name of the tax form, but I think it's a
Form 8300.
Yeah, there you go. That is basically saying, hey, this is the person that bought it. If they don't report it on their taxes as income, or they don't report this transaction on their tax in some way, shape, or form, IRS, they're the ones that you should go after, kind of thing. So that's just in the same way you do. Like, you still have to do that when you hire someone overseas to do something that's for U.S. based. You have to do that. It's essentially just a, hey, FYI, IRS, something happened here. So if the other person doesn't report that, that's like a kind of a backup on, it sends up a red flag on IRS, maybe do an audit kind of thing. So
Is this passed or proposed?
so this is any kind of transaction of something of value. So this is already something that exists. The issue is, all right, how do we deal with that in a area that is largely anonymous and largely not U.S. as well? So the digital asset regulations we're talking about have carve-outs in some instances on how do we deal with this if the person doesn't know who it is, because this is a digital asset world. This isn't I'm not sending a money order. How do we deal with that? That's some of these bills deal with that, but as of right now, those reporting obligations exist.
Great questions. Great questions. Dow, go ahead, and then we'll send it back to the speakers.
Yeah, this is great conversation, by the way. I think it's a very important topic that is not widely talked about often, right? I know there's like the whole legal Web3 ecosystem happening, but I think those conversations are super important, so I'm glad we're having them. Just two comments, right? Like the first one, I think when it comes to Uniswap, I get that regulators may want to create a status for brokers, but I think that's exactly what those protocols have done, is to make it literally impossible for that to happen. Like once it's code and it's deployed, I mean, maybe you can go after the original developer, but I think what those protocols have tried to do is to actually make it explicitly resilient to the type of desire, right? So I'd love to hear maybe a pushback or a feedback on that. And then the second point I want to make is, I think like 2-3 years ago, there was a lot of conversation around decentralized KYC. And the concept was to give the ability for users to provide attestations so that you'd be able to actually create DEXs and DeFi experiences that are requiring KYC and AMLs and things of that nature. But instead of that data being provided by a central provider, the user would be in the owner of that data, right? And so he'd be able to prove that his based United States or not based United States without necessarily revealing exactly where he is. He'd be able to prove that he's over 21 without necessarily revealing like how old he is. So the second point, my question would be, in the conversation that you guys have, are those conversations still happening? Is there some people suggesting and proposing those type of decentralized solutions or alternative to getting regulation from, typical KYC, typical AML?
Yeah.
So yeah, Johnny is going to give you a great rundown on the DEX question and Uniswap and how that's going to be dealt with, and that's one of the big things with this bill is who can be held liable. But as far as like the proof of identity, zero knowledge proofs are being developed very rapidly right now. I still think we're a few years away from that being a solution, but that's been one thing that even Treasury has endorsed in some instances of saying that you may be able to fulfill AML KYC obligations while still maintaining a level of anonymity if you have something like a zero knowledge proof, where the information is knowable but not known. So it's knowable that a person is in the US. It's knowable that a person is an accredited investor. It's knowable that this wallet belongs to someone that meets both those criteria, but it's not known to any single individual. So I still think zero knowledge proof is a little ways away. I think that soul-bound tokens of like proof of identity or something that maybe people are going to be dealing with, but there's not a solution as of right now. And I still think we're probably at least a couple years away from that being something that is readily accessible and readily accepted by lots of entities.
Great point.
Great points. Yeah, let's go to your copying. That's my take. I say great points.
Great points.
Yeah, let's kick it off to you because I know we have a lot of DeFi focused questions. So tell us about the bill that's related to DeFi.
Sure. So the Crypto Asset National Security Enhancement and Enforcement Act, CANSEE. It's a bipartisan legislation that's pretty much set to disrupt DeFi to its core. What it would and to your enforcement, Dow, what it aims to do is require that, if you remember the Banking Secrecy Act that Carlo mentioned earlier that requires KYC and AML, requirements for a financial institution. What they're trying to do is bring that into a DeFi protocol. And it defines what a DeFi protocol is, and then it also, the unique attack vector that it has is it holding individuals who have 25 million USD worth of a governance token liable for the acts of that protocol. So if you, for example, Uniswap, this pretty much puts Uniswap, which Uniswap Labs is a United States-based company, it puts them directly in the crosshairs. It's saying everyone who operates across your platform needs to be KYC'd. And if you're operating a decentralized platform like this, you need to be registered, right? And you need to make certain reports, and you need to show your reserves and you essentially your traditional financial institution reporting, right? And so this is obviously going to pretty much nuke DeFi as we know it in the United States. Because if you're Uniswap, you now have to register and you have to KYC all the United States individuals that are operating across your platform. And if you hold 25 million USD of a protocol or an DeFi exchange's governance token, which is a big amount, but you're looking to, obviously have some individuals in mind, and the platform does not conform to the regulations, you can be held liable for the transactions across that DeFi protocol. So pretty harsh. And then outside the United States, it also has in their provisions for allowing banking, because when you have anti-money laundering laws that allow the United States government to impose sanctions on U.S. banks doing business with foreign institutions that are involved in money laundering. So what does that mean? That means, banks in the United States who come into interaction with even foreign DeFi exchanges could be subject to fines as well, or sanctions. So it's extremely strict. If this were to pass, it is bipartisan. Romney and some others have supported it. The final piece of it is the kiosks. As we see the Bitcoin kiosks, this bill would require KYC for the kiosks as well.
Like the ATM machines?
Correct. So, and the reasoning behind this is, some studies are saying, last year alone, North Korea hacked 1.2 billion USD worth of crypto assets, right? They're trotting out like this is a national security issue. This is an issue of ending money laundering and illicit criminal activities. And so that's the basics. Any questions about that?
See, Tammy has her hand up. Did you have a question, Tammy?
I do, and Johnny knows that I love to talk banking and credit unions. He's all about it. But being so familiar with it, talking about the 10,000 threshold, the currency transaction reports that happen, have they drilled it down enough that they're trying to emulate the banking industry, pushing it down to fill out suspicious activity reports? So if you're trying to go to all these different ones to try and move this money, will it trigger things like that as well? Have they drilled it down to that point, or this is obviously in talks now, but I'm just curious if they're going to emulate it that far.
I'm not an expert on the Banking Secrecy Act itself, but if it is incorporating the standards of banking in that respect, I would imagine that the report outs would have to include those kind of transactions. Carlo or Bernals, if you have any more info on that.
Yeah, I tend to agree with you because I think the whole point of all this is to combat money laundering. And banks are under their own independent obligations when it comes to suspicious transactions, which is why they have to collect all this information. And when they see structured deposits, I think what you're talking about there, Tammy, is the typical money laundering scheme will be to take and do incremental deposits across different bank accounts under different corporations that are not really doing business. I've seen many variations of this, all to try to avoid that $10,000 threshold. Banks see this pattern, they will halt the transactions and close the account and then immediately report that information to FinCEN as a suspicious transaction, which then could trigger a investigation by the United States Department of Justice through the FBI or Secret Service or whatever agency does that. Could I see that translating to crypto transactions that are done in a structured fashion to avoid the same reporting requirements? Absolutely, because as Senator Elizabeth Warren has been preaching for a long time now, she thinks that the blockchain is pretty much a facilitator of money laundering, and she wants to see a stop to that. So I can definitely see that expansion and very similar Bank Secrecy Enforcement Act activity going on blockchain as well.
But yeah, this would effectively
a
nuke, Uniswap. If this bill were to pass, Uniswap would have to pack up tent, pack it up, because I mean, you would have to register and satisfy that you were indeed capturing the KYC. And if you didn't want to comply, well, I mean, if they wanted to move overseas, then they would need to somehow effectively screen out U.S. citizens from using their platform. So it's really would be catastrophic to a company like Uniswap.
Yeah, and to add in, I know that there's been a few people that have already come out. I think Coin Center has already come out and criticized the bill as potentially unconstitutional, because in addition to people that own more than $25 million worth of government tokens, and it's unclear whether that's just like if you have a Uniswap government token or if you just have more than $25 million in a liquidity pool that's on Uniswap, if that would also count. But some of the liability is also on potentially the publisher of that code. And there's this case called Bernstein versus DOJ that went on back in like the early 2000s when email was new and everyone was worried about terrorists sending encrypted messages. And there was this DOJ rule that if you had this certain level of encryption, you're a publisher of how to encrypt messages, that you had to get a license to publish that in the US. And that's where the code is speech kind of line of cases came from, of saying that this is free speech. The mere publication of any kind of code is protected by speech in the same way that the anarchist cookbook is protected by free speech and all this other things, that just the mere providing of information is protected. So that's one of the challenges that has been raised to this DeFi bill, is whether this attempt to create liability on just the publication of code is something that's acceptable in the U.S.
Interesting. Go ahead, Dow.
Yeah, so I hear that, and obviously we've been hearing this for years, right? That a lot of those regulations, they hear for consumer protection, they hear to prevent like money laundering, terrorism, financing of terrorism, things like that. I don't know if you guys want to go on record, but I'm just going to ask the question because I think a lot of people are thinking about that. How much of those efforts are just politically driven and based on simply lobbying from, sectors that might be threatened by crypto versus actual regulation to provide clarity?
Dow, I think you could probably speak to that better than anyone. As understanding the space, we know that there are a lot of bad actors, and absent this zero knowledge stuff coming along quickly, that has to be addressed. That's something that's kind of a blind spot, I think, in CT in favoring, their crypto utopias, is minimizing or comparing it to cash, or, there's other people are going to find ways. There's other frauds, Bernie Madoff. I think we do have a really unique problem with cryptocurrency facilitating a lot of crime. Whether comparatively there's more good use to bad use, I won't comment on that. But if the reports are true that North Korea just in 2022 got 1.2 billion USD worth of crypto, that becomes a national security issue. And that's just one actor. So there is some legitimacy to this, and it behooves us to poo-poo it just because we are, attached to some sort of reformation of the financial system. We got to find a way to have both.
I hear your point, right? So let me reframe the question, right? I do want regulation, right? But I would say in the way that those regulations are being written, do you think that the intent of those specific regulations that we're talking about are there for their intended purposes, or they're there for some political reason? Like, I know it's like as a subjective question, but like if you had to like put your finger on it, like would you read in those regulations like an effort to actually provide clarity and protection, or is it simply an effort to slow down the industry that maybe is entrenching on other industries?
Well, with this specific, the CANSEE Act, it is bipartisan. I think you will have good consensus across the aisles that this is a national security issue. There are a lot of bills that are just political sport, like, a bill to get rid of Gary Gensler. Like, come on, that's definitely happening.
Gensler.
There's definitely a lot of that. But I do think this is one, when you have Romney, who's kind of a sensible conservative, kind of traditional, I do think there's some legitimacy to this. And I don't know if it passes the House with Republican control there, but I think it has legs, and it's something we should keep our eye on. I don't think it's...
Gang, can I interject for just a second, gang? I'm so sorry. I have a hard stop coming up in about 10 minutes. I have an appointment that I have to get in the car to. So if I drop because I'm in the car, I apologize. But thank you so much for the invitation. And I know I'm going to be checking in to listen to the rest of this as well if I do get rugged.
No problem, Carlos. Sorry, we all have a bunch of questions, but thank you for coming. Yeah, great insights. And if you have to drop off, we understand. I had a question, and I had a question too. Shit. My question was, remember that screenshot that our favorite Futter in Chief was sharing, that there was a bill going around that people wouldn't be able to invest more than 10% of their income. Is it either one of these bills? Like, I'm sorry, they wouldn't be able to invest more than 10%, or they would have to become an accredited investor.
I believe, Bergnals, that's part of what you're going to talk about.
Yeah, so the Financial Innovation Technology for 21st Century Act, also called the FIT Act, also called the Digital Market Structure Act, there is something in there, but that's only for tokens before they've reached the level of decentralization. So there's nothing stopping you from, it's the same way that like you can't be a unaccredited investor that buys a seed round, that invests in a seed round in an NFT, or invest in a Series A, or buy something in those kind of ways. You have to be a accredited investor for lots to fall within those exceptions. So that is to sell to somebody and this is just sales. This isn't distributions. But to sell to somebody decentralization, there is a requirement that they either be accredited investor or that they meet certain financial structure that threshold. This is one of the issues with the bill I'll be talking about, is that how do you do that in an environment that's largely anon and those kind of things. So that is something that is raised. It's not as big of a deal as people are probably making it, because again, this isn't stopping you from buying $100,000 of ETH, or buying like $10,000 of Pepe on a decentralized exchange, or on Coinbase or something like that. It's just buying it from the actual issuer that's going to be an issue in there. So,
got it. That makes me feel much better. But yeah, I do want to be cautious of your time. So go ahead and start on the bill and discuss the last bill, and then we'll get to the hands.
Perfect. And yeah, so we saved the best for last. The Lummis-Gillibrand and the DeFi bill are both good to know, because I believe some aspect of them both get into any kind of final legislation. especially like everyone knows that the Bitcoin like ATMs are skeezy. So like, yeah, maybe we should have some more like regulation on those kind of things. Or the Lummis-Gillibrand has some issues as well that might be into the final bill, but that those are both in the Senate, and there's really no momentum going on in the Senate right now. All the momentum is going on the House side of things, which is rare. Usually, Senate is the tail that wags the dog. This is the opposite. So a few months ago, McHenry, Representative McHenry, who's the chair of the Financial Services Committee, said that, hey, we're going to make a push to have two things done this session. The first is a stablecoin bill, and the second is this comprehensive digital asset legislation. So they released a discussion draft a couple months ago, which was like 200 and something pages, 146, something like that pages. Super in-depth, really breaks down the issue. It's been widely supported by the industry. It certainly has issues, but it was the most comprehensive and probably the best effort we've seen so far to thread that needle, providing some regulatory clarity, providing safe harbors for people that are just creating code or just trying to innovate, providing ways to realistically sell tokens in the same way that the Jobs Act created what we call crowdfunding, Reg CF, and Reg A Plus, which are both kind of ways that you can sell and raise money that isn't a IPO, $7 million, ton of registration with the SEC, ton of reporting obligations, like a middle ground. So this bill provides that. It was, like I said, it was presented a few months ago, and then the final bill, the final version of it that was going to go to the committee votes was a couple weeks ago. So, and actually a couple days ago is when the Financial Services Committee held their what's called a markup hearing, when people can submit amendments to it, talk about it, debate it, see if this is something that should go to the full House of Representatives to be further debated, potentially passed there. We'd have to go to the Senate and then eventually the president. So that happened a few days ago. It passed the Financial Services Committee with a 35 to 15 majority, which was huge. Any kind of bill in the space is going to need some wide Democrat support to have any chance of actually being signed into law, and it has to be Democrat support at the committee level. So passed the House Financial Services Committee. This was also an odd bill because it was a part of the Agriculture Committee because the CFTC is involved. The Commodities Futures Trading Commission is involved. So it went to there. It had enough that they just did a voice vote, which is if you agree, say aye. If you disagree, say nay. The ayes have it. We're good to go. They didn't even vote. It's count who actually voted for it. So it had enough support there that this is going on to the full House. It was really huge because there were 6 Democrats on the Financial Services Committee who supported it. Really, everyone knew that Richie Torres in New York was going to support it. New York has been they had their bit license. They understand that regulation for a space is important, but also that space to develop is important. So Richie Torres was always going to support it. Gottenmeyer out of New Jersey, also the same way. But the fact that 4 other Democrats joined in and agreed with this on the Financial Services Committee was huge and fairly unexpected. So, it passed there. Like I said, this is fairly comprehensive. I pinned up a post that kind of breaks it down. I've done a couple other posts if you really want to dig into the nitty-gritty of what's included in there. But it's a comprehensive bill that covers pretty much everything except where it has carve-outs for DeFi, where it says hey, this isn't intended to be regulating DeFi in lots of aspects. Let's form a committee to study this with Treasury and figure out how we're going to deal with DeFi. And it has carve-outs for NFTs in the same way that MiCA had carve-outs for NFTs. And they both have provisions in there saying that this is going to be something that we're looking at, future study. We're going to need future regulation on that. That's going to be something that is going to come, but it wasn't that. And another big aspect that came through the committee is that the committee process is that one of the big hits against this bill is it gives a lot of powers and a lot of authority to the CFTC, but there wasn't a lot of funding in there for the CFTC. So what happened during the amendment process is that there was, I think it was like 120 million, 150, somewhere like that, that is going to be appropriated from the SEC's budget and given to the CFTC to make the bill still budget neutral, but to provide the CFTC with necessary funding to regulate digital asset commodities. And just one last thing, the big thing this bill does is it also creates a way for exchanges to sell digital assets that are both digital asset securities, digital asset commodities, and stable coins, with currencies. So right now, if you want to be a alternative trading system, ATS, that's registered with the SEC, all you can sell is securities. You can't sell commodities on there. So that was a big thing holding back Coinbase. Is Coinbase is like, all right, well, our biggest area of sales is Bitcoin, and you're saying if we want to sell some digital asset that you consider a security, then we can't also sell Bitcoin, or we can't also sell USDC. That's not a functional way. It doesn't work in our environment that someone is, because you're exchanging USDC for Bitcoin, Bitcoin for ETH for Dogecoin. It does, like, that's how the space works. So it wasn't a workable system that we're under to even register with the SEC. This sets up a new form of exchange, a digital asset exchange, that's allowed to transact with all of these with certain segregation requirements, with certain reporting obligations. Any kind of regulation is going to have some kind of KYC, know your customer, some kind of anti-money laundering on the on-ramps and off-ramps. If you're trying to exchange fiat currency for any kind of digital asset, any regulation is going to have that. That's just going to be a part of it. Technically, you're supposed to already do that. So that is a way for people to comply with that. It's a way for the space to still stay fairly decentralized, still stay fairly anonymous, but also when people are trying to cash in and cash out, that they're going to have to be able to prove that I didn't get this from a hack, or I didn't steal this, or I've met my KYC obligations. I'm not North Korea. So I think it's common sense. I was shocked to see the level of support it got in the House. I don't know what kind of chance it has to go into the Senate and be signed into law. I mean, before yesterday, with the stablecoin bill blow up during committee hearing, I really thought the stablecoin was the best and last hope of getting something done this Congress, and that maybe this would happen next year or a year later. You could attach this to some kind of bigger bill and get this through. But it's kind of switched where now this is the bill that has the more momentum, and the stablecoin bill really took a big hit yesterday. So.
Just to touch briefly on the stablecoin bill, they didn't exactly say why. They said the White House kind of busted up negotiations. Ranking member Maxine Waters came out hot and saying this was like some sort of extremist agenda. And the Democrats that supported the HIT bill or FIT bill did not support the blockchain bill, the ones that we didn't expect. I don't know if Gottenheimer and Torres did. You probably know.
They did. So Gottenheimer, Torres, a few other Democrats ended up getting it. It didn't have the same. It had some bipartisan. I think they had like 19 Democrats who voted against it. So there's 23 or 24 on the committee. So there was a few that came out and supported it, which was good. That's the only way it has any kind of chance there. But yeah, so basically the stablecoin, just too long, didn't read on that. They had a bipartisan bill that was getting ready to go to markup. The White House took issue. When I say the White House, Biden doesn't give a shit about finance. That's the thing. He doesn't care about anything finance. So his staffers, he's kind of assigned that, or kind of lets the Warrens of his party kind of rule his policy on that. And they killed the deal because there is provisions in there that federal regulators wouldn't necessarily have jurisdiction over every stablecoin issuer. There's going to be state stablecoin issues, state chartered stablecoin issuers, federal chartered stablecoin issuers. And so the lack of federal oversight over to some stablecoin issuers is what ended up killing the deal It was at the 99-yard line. Biden, the White House blew it up. So then the Republicans went forward with their original bill that wasn't largely agreed upon as bipartisan. And there was a giant blow up, and there was just a bunch of drama that happened along that. But the House was fairly supportive. The committees were very supportive. It was really just a White House issue.
And the nuts and bolts of that were essentially, I kind of liked it. I mean, they had, obviously there were a lot of like primary regulators options. It could be regulated by the federal, like the stablecoin issuer could be regulated by several different bodies. I could see how that could create kind of some confusion, but it also, it had some hardline rules that if you want to issue a stablecoin, you have to be registered. Your stablecoin must be backed by hard assets, whether it's U.S. dollars or, Federal Reserve notes or, real assets, not on-chain assets. And if you are going to be issuing those, there was going to be a KYC requirement through the bank security requirement. And what was the last piece? I can't remember.
I think you covered it. It was the moratorium on algorithmic stablecoins. So stablecoins that are algorithmic. There was hey, let's pause this. We're not saying they're going to be banned, but let's study this because we all saw Terra Luna, and maybe we're not ready for that. So for right now, back it with cash, back it with treasury bonds, and
and no commingling. If you're holding stablecoins for someone, you can't use them or you borrow against them. So which good things, all good things. The hang up was the multiple regulatory schemes. And I guess that blew it up. So that's that. Let's go to hands.
Yeah, let's do it. Brad, welcome. Happy Friday. I know you've had your hand up for a minute, and then we'll go to Hodler.
Yeah, GM gang. Awesome convo today. Would love some opinions on, so we always talk about these bills being bipartisan, right? And, as we're going into an election year next year, do you think that, or open question to kind of anyone here. I mean, like, do you think that any particular side is going to kind of use this as a platform to run on, or do you think that the lack of education around the entire topic is that both sides are gonna shy away from it next year?
I mean, we've already seen RFK Jr. has been campaigning on kind of his stance on digital assets. Whether he has any kind of chance in election is unclear. I mean, we're seeing Emmer, we're seeing lots of people on the Republican side that are definitely making this a free choice issue, especially when it comes to a CBDC. There's very big that this is nanny state, this is surveillance state. We're opposed to a government issued dollar bill that they can track. That's become a big political issue. And one of the things that was interesting when we talk about bipartisan is that the 6 Democrats on the financial services who voted on the financial services, who voted for the FIT bill, the comprehensive digital legislation, those 6 people, the average age was 46 on the Democrat side, and the average age of the people who voted against it was 61. So it shows that this isn't a strictly partisan issue. I think Republicans are very much supportive of growing digital assets and making regulations that are light touch and that allow innovation in the space. Democrats largely are more on the side of we want to have that level of surveillance. We don't want that level. We want more regulation. But it's not strictly partisan. I think the younger Democrats, especially, that have seen digital assets, that interact with digital assets more, are more receptive to this kind of common sense regulation, as opposed to older, more entrenched Democrats that maybe have more of an interest in the status quo, I'll say.
Yeah, I think we've all seen the video of our, elderly congressmen and women this week. I'm going to just leave it at that. Go ahead, Hodler. Welcome, Hodler. What's going on? Thanks for joining.
Hey, happy Friday. Another great space, great panel. I just want to quickly comment on Dow's point about the drafting and then kind of turn back into a question for Johnny and Ordnals. Dow's point about the drafting, I think it's very public and very well known that most laws at the federal level, and probably state, but certainly federal level, are written by industry. the laws themselves, the regulations are often always drafted, almost always, so I think we'd be naive here to think that nothing's going on in the background. We don't have direct evidence of it, obviously. And there's probably a couple, some legacy players that are interested in different angles of this. So I think we'd be I'd be shocked if these Congress people drafted any of these by themselves without industry on, and particularly the legacy industries, because both sides love to deficit spend. They do it for different reasons, but deficit spending is part of this, is interesting point because it's a big macro level, deep issue that, Bitcoiners are trying to upend, right? By having a Bitcoin standard. That's a, not getting into those weeds there, but that's an interesting macro level overlay to some of this that's part of this analysis for the Warrens and those kind of people probably. But the one thing I thought interesting about the Lummis bill, I know it's kind of just sitting there, as Ordinal said, but I know for a fact, and I think it was pretty public on Twitter and elsewhere, that certainly Bitcoiners and Bitcoin miners, and I think some other broader crypto people did see it before it, during the drafting stage. So you did have Bitcoin and crypto input in that one. So we'll have to see, if it does move anywhere. But that kind of leads to my question for Ordinals and Johnny or anyone else. The bipartisan one that did just get out of that committee used the word commodities, and Lummis bill used that word a lot too, digital commodities, and pointing to the CFTC as the arbiter and the enforcer and overlords, if you will. But how much overlap is there between the one that just got passed, at least from committee, to the Lummis bill? Have you studied that detail?
Yeah, I mean, there's a decent amount of overlap. I think the ideas are generally the same. I think the purpose is generally the same. They're both trying to say, listen, there's a lot of uncertainty on what are digital asset securities, what are digital asset commodities, who can sell these, what authority does the CFTC have? And one of the things they call is the spot market gap, regulatory gap. So right now, the CFTC doesn't have any authority to regulate spot markets. So if you want to buy 100 bushels of corn, the CFTC doesn't have any kind of regulatory authority to say, hey, the person selling this, you should actually have this, and here's what your holding requirement is, and things like that. And so the same thing applies to Bitcoin. If you're in FTX and you want to sell 1,000 Bitcoin, the CFTC doesn't have any kind of oversight over that spot market. They can regulate futures. So I want to take a short position, or I want to take a long position on Bitcoin, but they don't have that spot market authority. So both bills do that with the CFTC. I think the main difference is just that the level of detail that went into drafting. And you're right. I mean, I'm a member of various digital asset lobbying groups. I'm a member of the Wall Street Blockchain Alliance. I've worked with the council over at like Coinbase and Circle as far as getting early drafts of bills and providing our insight into where we can improve that. So you're 100% right, and also you raise a very interesting point on the entrenched people having a say in this bill. And I think there's been some speculation on the stablecoin bill in particular of, all right, wait, we're so close to the finish line. Why would they blow this up? Why not just the Congress is on break now? They're on break until the beginning of September. Why would you blow this up when we can just come back in September and get this across the finish line? Why we can make this a bipartisan bill? Why are you doing this? And the speculation is there's twofold. One, banking regulators and banking lobbying groups have been focused on a few other bills that are more directly involved in banking. So the people you can see, these entrenched banking regulators, haven't really been lobbying against this bill, haven't pushing against it yet. If you give them a month to focus on it, maybe they do. And two, no digital asset regulation is passing by itself in this Congress and being signed by itself into law by this president. So it's going to have to be attached to something. National Defense Authorization Act is about to be, it's just coming up too quickly. They're not going to be attached to that. Maybe the Farm Bill it can be attached to, but government funding ends September 30th. So the thought is that McHenry and others are trying to get this through committee before the break, very beginning of September, get it through the House, get it approved by the Senate, and get it attached to that funding bill, so that it has a chance of actually being signed into law. So that's the idea on why things are moving so quickly.
That's great info there. By the way, I just want to apologize. I think I called you ordinals by accident instead of birdinals.
It's all good. It's
Sorry about that.
I get top of mind ordinals. Everyone thinks about that.
I did that. I called him birdinals. Yeah.
Just don't call them boardinals.
Exactly.
No, great questions and great topics. I know we are past the top of the hour, so I wanted to give you guys a chance to chime in on anything that we may have missed. As you guys know, Johnny, as you know, we're going to move on to the second part of our show. So I'd love for you to stay on if you can, but if you need to drop off, I totally understand, because I did want to talk about SBF and some other stuff, because you guys talk about regulations, and from a consumer perspective, then we see SBF getting off free. So like, where's the justice? Like, where's the justice on this?
He has not gotten off free quite yet.
It looks like he's on this way, but whatever. But any last comments or thoughts or anything that you want to leave us with, or that we should be on the lookout for in the upcoming weeks?
So just to make clear, I mean, Carlo pointed out that there's already, in the Jobs Act, things that are going to impact the landscape in the next year. If nothing passes, we're going to continue to be in regulation by enforcement and just confusion and all the innovation leaving the United States. We got to pass something. We got to elevate these issues, and hopefully they are campaign issues, but they're not divisive, and we can find some common ground on this. I try to avoid piling on specific legislators or politicians with their views on cryptocurrency, because I don't want them to become controversial. I want to have a dialogue. And maybe this can be a template, especially with the younger generation's bipartisan support, for helping us work together, problem solve, and pass legislation that meaningfully impacts everyone. So we need to keep our eye on this stuff. We need to be vocal. You should be able to call. My Congresswoman is Ilhan Omar. I know her. I speak with her. She doesn't agree with everything, but we have to continue to push our Congress people and raise these issues and let our elected officials know that we care about this. So that's
yeah. Brian Armstrong, just he from the CEO of Coinbase, tweeted out something fairly recently. Coinbase initiative makes it exceedingly easy to send an email to your congressman or woman to say you support some of these digital asset regulatory efforts that have the support of the industry. It provides any information you need as to who has been seen as supportive of the industry, who hasn't really said one way or the other, and who have said negative things. It provides you all the information you need for calling your elected representative. I know it's like old school, but one call, they count that as 7,000 people emailing them, 10,000 people. They know if someone's calling them and saying, hey, digital assets are important to me, they're going to recognize that. So just call your congressman or woman, call your elected officials, just to let them know that this is an important issue to you and where you stand on this, that you're supportive of the industry. And that goes a long way. If they get a few calls, they get a few emails, something that they saw as kind of crypto bros, who gives a shit about them, if they get more support from that, they hear people reaching out, that's something that they will campaign on, that they will try and make a priority. So it's really up to us to make sure we're doing that.
Love it. Yeah, I think that's a great point. Like, we do need to be more vocal to the right people, not just on Twitter Spaces complaining. And I'm definitely guilty of that. But yeah, I really appreciate you guys coming by and sharing with us about the recent bills. But again, if you want to hang out, feel free to hang out. If you need to drop off, feel free to drop off. I did want to say what's up to Brooke. Welcome, Brooke. What's going on?
Hi, guys. I just want to know if it's too late for me to go to law school, because I just want to be smart like these guys. Johnny gave me a heart. So I think I'll finish my cybersecurity master's degree and then go to law school, because who doesn't need an entirely new degree? But this stuff's so important. Oh my God. What the fuck, Johnny? What the fuck? No, this is so good. We all need to understand this stuff. And it's also like, you know, we have to like really appreciate the people doing the research and then coming and educating us, because there's just too much to it if you want to be in this world, this crypto world. So I'm just very grateful for you guys to come and educate us. But yeah, I definitely, at one time I thought I wanted to be an IP attorney. And then I realized like there's no money in that, because I really wanted to like protect software developers. And then I realized like, no, actually you have to protect the people who are paying the software developers. So that went out the window. But I do like the idea of cybersecurity law. Do they even have that? I don't know. But this is a great conversation. I love being a part of it.
Thanks so much for chiming in. Yeah, I mean, I think we can all say with all the shenanigans and sketchy stuff that happen in this space, these guys are going to be busy in the future, because a lot of y'all are going to need some lawyers. So definitely, hopefully not looking forward to that, but hopefully I think you guys are going to stay busy. But yeah, so moving on to the second part of our show, because I do have to wrap up a little early today, so I'm going to keep it going. But yeah, I was commenting about SBF. So it came out yesterday and that the U.S. government dropped the political campaign finance criminal charges against him. So if you guys don't remember, he took $93 million of potentially customer funds and donated it to politicians. And also, that's just, maybe Johnny, like when I see things like this, that's why it kind of like makes me lose faith in the criminal system, because I think we can all agree like he should be in jail. And I think, Brooke, you were the one that made a tweet about Ross.
Oh yeah,
I mean, the difference, right? Go ahead, sorry.
No, just I think people need to understand how much I was a part of the Silk Road world, and like Ross, who created that beautiful tool for people to use, is still in prison, and he created a website. Like not even like he wasn't even doing the stuff. He created the infrastructure and is doing what, a life term? I can't remember now, but he's still in prison this much longer. But yet SBF gets out. Like, please make it make sense, John.
Well, so this all goes back to why fraudsters go to the Bahamas, and part of his extradition. And I believe he consented to extradition, so I don't know exactly how this interplay goes, but there is a treaty that governs extraditions, and part of it is if the Bahamas don't agree to the charge that's being extradited for, you can't charge it for them later. And I think they tacked that on after the extradition. So there's just a technical little loophole there, and there's an advantage to going.
I thought it was a loophole, like but isn't that a United States law that he broke?
Keep in mind that we do need to recognize the sovereignty of other countries, right? And so if let's imagine different circumstance. Let's say Kim.com needs to be extradited from Australia, and they extradite him on a certain charge, and then we charge him with a bunch of other stuff when he gets here. It creates kind of a due process issue. There are good reasons for obeying treaty laws and things like that. But don't forget that there's about 7 other very serious charges lined up against SBF. Like, he is a long way from being out of the woods. He nearly got his ass thrown in jail for witness tampering. So they're not giving him kiddie treatment, in my opinion. Birdnells, maybe you think differently.
No, SBF is going to jail for the rest of his life, or for a vast majority of his natural life. It's just the fact that these charges got dropped again, like Johnny was saying. They charged him with a bunch of stuff after the fact. There were other charges that got dropped earlier as well, that weren't agreed to per the extradition agreement between the U.S. and the Bahamas on this. So essentially, the U.S. said, "Hey, we want to charge him with these 10 things." And the Bahamas looked at those 10 things and said, "Yeah, that's fine." And SBF didn't oppose being extradited. He didn't consent to it, but he didn't oppose it either, because Bahamas prison sucks. But you got extradited on those 10 things, and then afterwards DOJ tacked on a bunch of stuff, And he said, wait, you can't do that. That wasn't a part of the agreement. And DOJ said, if Bahamas says no, we won't do it. If Bahamas says yes, then your argument's moot. And Bahamas said no, we still want our pound of flesh. We want to potentially charge this person, even though there are U.S. campaign finance laws. Bribery is illegal in every country, pretty much. So there's probably Bahamas laws that he can be charged under. He said, no, we want to still have our chance at this as well. So don't charge him with that. But like I said, there's enough in the meat of the other charges that even if he gets off on a handful of them, which he very well might, he still is going to likely be in prison for the rest of his life. Bernie Madoff didn't get convicted on all the charges that he was charged with. He still went to jail forever. So I think there's a lot of, obviously when you see, hey, campaign finance charges dropped against a guy who gave a shit ton of campaign finances to people, you're like, fuck, that's stupid. Why are we doing this? But in this case, it was more smoke than fire.
So quick question, I'll throw it over to Brooke. So whether he gets charged, well, obviously the charges are dropped now. Does that mean they get to keep the money? And would it have mattered if they got if he did get charged? Would that money have been taken back?
I believe that the campaigns themselves would be charged with an infraction of campaign finance law and would have to, return the funds. I don't know, though, of the exact status, and especially when you get into the PACs, because he gave a lot of money to Republicans through these PACs. I don't know how to unwind all those donations, but I think there would be a separate not criminal charge, but or enforcement action against the campaigns themselves to get that back. Could be wrong.
I wonder why they dropped the charges. Go ahead, Brooke.
Exactly. But then on the other hand, did they know? I mean, how would they have known that he was using customer funds just to, be not devil's advocate, but just to look at the other side of it? How would they know? Is it retroactive illegalness? That's a total word. It just doesn't make sense to me. But that actually wasn't my question. I've always wondered about the extradition. Was it he's fucked either way? It's just he had to kind of decide which prison was worse. But either way, he's being I think you explained that, and maybe I'm just repeating it. But sometimes I think people hear these headlines, and just like Jess said, they're like, damn, that was thrown out of court. And, and then of course, me rush to but Ross has been in jail forever. Okay. Let's all just, hang on a second. SBF is going to jail for forever. But that always just was curious to me. Would he have the same type of, or did he have the same charges in the Bahamas? And how did that translate? It's okay, the United States has different laws, and so they charged him, and the Bahamas had to say, well, we are charging him with this, and he gets does he get to choose? How did he get here?
He could have contested it and made a stink. I don't know how long that would have taken, though, and he was sitting in Bahamas jail, so
that's right.
He wanted out of there. He may not have made it out of there if he didn't agree to extradite. So, but you got to keep in mind, treaty law is a whole animal, right? And whether it's with Native American tribes or a body of countries uniting, or a single country like the Bahamas, it's law that has to be respected. And there's a protocol for extradition that I think there's good cause for. When we think about the due process laws, we want those in place. Right. And although we want our hands on SBF right away, and he ultimately consented, but if he had consented, there would be a procedure and due process by which he could contest it. And they would look at the treaty and look did he break a law that's both against the law in the Bahamas and the United States? And they would go through this litany of things. And he avoided that by just consenting. So he didn't choose what charges were brought against him, but he is at the mercy of those treaty laws, and the Bahamas still hold some authority to kind of dictate what he's charged with, and reserving charging himself, as Bernal's pointed out.
Yeah, and as Carlo raised to us as well, we've had these conversations before. If he were to be convicted of the campaign finance charges, there would likely be a fine element as a part of that, maybe disgorgement, but that doesn't go back to customers. That will go to DOJ, that will go to the US government. While the bankruptcy proceedings are ongoing, there's civil claims that are ongoing. If those payments were improper, they can be clawed back through those proceedings, and those actually go back to customers as opposed to going into the government's coffers. So it might be this is for the best when it comes to the actual customers having more of their money back. In the fact that these are going to be brought as civil claims as a part of those proceedings, as opposed to being fines assessed against him, which maybe wouldn't go back to them. So,
okay, can retail investors start suing FTX and SBF, or is that like is there going to be like a class action? I am not an attorney. I just call Johnny when I need one. No. Actually, that's true. But like how is there going to be? Yeah, can retail investors start to sue? I like your bio, by the way, Bernal's. Like, you like suing people, so I think you're the one to ask. It's also very scary.
Yeah, so I don't do as much litigation anymore. I'm more on the corporate side now, but I still like to sue people. It's still fun. Litigation is good times. But no, not really. During bankruptcy proceedings, all other lawsuits are stayed. So I don't know if SBF has personally claimed bankruptcy. I haven't followed that really. I know that FTX is obviously going through bankruptcy proceedings. So no, those would have to be raised as a part of the bankruptcy proceedings, to kind of interject and say, hey, I have these other claims against this person, so some money should go to me. But you can't just sue independently. When a federal bankruptcy proceeding starts, all pending litigation gets either stayed which means paused until the end of bankruptcy, or it's not allowed. So you can't really at this point. Everything's going on through the bankruptcy courts. There's nothing as far as like civil courts really that can go on. I mean, there's some class actions going on. You've seen them against Shaq trying to avoid service, but the actual FTX entity is immune from lawsuit during the pendency of this bankruptcy proceeding.
Great questions and great takes. Mihai, I did see you were up here. Did you have a question or comment or anything you wanted to chime in on? And welcome.
Hey, thank you. Hello, everyone. Maybe a couple of things to mention in regards to Bernie Madoff. Sorry, I don't know how to pronounce his name correctly. I think he passed away in April, if I'm not mistaken. So in regards to spending the rest of his life in prison, I think that's off the table. In regards to Ross, by the way, I may have, let's say, an unfriendly opinion. I know the guy was a bit of a kingpin. He was basically playing some dangerous games, besides him creating the market that, to be honest, I am very impressed about. But at the end of the day, I don't think I agree with other things he was dealing with. I fully agree with the market that he opened. The guy was brilliant what he was doing, but extending his tentacles to, as I said, trying to behave like a gangster, I don't agree with that. And in regards to what is going on, and this is the last point because usually I go for rants and I don't want to take over the space. In regards to what's going on with the stock market today, by the way, this is very reminiscences to the 1920s, and throughout the 20s we had a very interesting, I would say, history of the markets. And I hope everyone knows and heard about the blue sky laws that came into place in 1910, 1911, roughly about that time, where basically the laws were supposed to protect these investors that were going a little bit with more risk than they can afford it themselves to put on the table. And therefore, all of a sudden, the people thinking that the government is protecting their investments from the pump and dump schemes, people got in themselves deeply in that, to be honest, so deeply that all of a sudden, as we know, the 20s roaring economy happened. How long did that last? It lasted until a Tuesday, on the 29th of October, if I'm not mistaken, 1929, when everything went tits up. So why did everything went tits up? I understand that all of a sudden the law, the blue sky law, was supposed to protect what you call it, the investors from trying to over leverage themselves into idiocracy, and also trying to protect them from pump and dump schemes like I don't know, as I said, scams. But they didn't. The law didn't protect the investors from what do you call it? The investors where the investments were going. Like for example, even the investors themselves, they were trading their own stock markets to pump their own stocks to trick other investors. So they found a new way. Bankers, they were trading their own stocks. Everyone basically. They found a loophole in the law, basically take advantage. And therefore, all of a sudden, you had Dow Jones. How much? 90%
Hey,
down.
Mihai, you can't give us a whole stock market history. This is.
And I will. Okay, I will finish off with this. I do apologize. I will finish off with this though. I think that we are due for some very nasty regulations. And what is going on in the market right now? It's scams all over the place. 99% of them are absolute and utter scams. Until something is gonna prove right, that thing you cannot call it that it's not a scam. You can't wait until the rug is being pulled and all of a sudden, wait, this wasn't a scam because this, this doesn't work like this. Unfortunately, this industry is relying, or someone said in here earlier, on uneducated individuals for them to invest more than they can afford to lose. And bear in mind, we do this over and over again. We're not going to get away from this until the government is going to step in and screw us all over. We need to realize and put our foot in the door before the government steps in and takes away more of our liberties they have done for the past 100 years with their legislations in our financial systems. Anyways, we're not dealing with money right now, and to be honest, it's kind of our own fault. Look at us, what we're doing. But yet again, maybe one day we'll have a solution for it. I do apologize for taking over the space. Nice chat.
Thanks for sharing, Mihai. No,
and
I think.
Let me just reply to, like, I completely understand. No one's saying that Ross should have not done time, but he's got. I looked it up again. I forgot that it's life imprisonment without the possibility of parole, and being convicted of conspiracy charges and distribution of narcotics back in 2013, when there was really no. Again, I'm not an attorney, but the idea of have the punishment fit the crime. Building an infrastructure for someone else. Nobody really believes that it was the right punishment. Life in prison, like it doesn't fit the crime. So I can appreciate your take, and I hope nobody listening to this thinks that, I think that kind of thing should be you should just get away with. But it's the hypocrisy and the two sides to the coin in the law of the United States. It's not the same for everybody.
How much would you give someone who's trying to get a hitman to get you down? How much?
All right, guys, what are we talking about here?
Can I just say, like, this is cool to go
way.
back down the history. We got like two OGs in the house. I was just listening, loving the conversation, by the way.
All right, guys, we're getting off track with hitmen and all this other stuff. We do not support any of those things. But yeah, I did have one more question, or I guess I'd love to hear Johnny or Bertinals chime in on if you're familiar with it. I also saw that Binance had filed a motion for the CFTC to dismiss the claims against them, and just like, what would the outcome of that look either way? Well, obviously, if they dismiss it, it would be good. But if they weren't to dismiss it, what would that look like?
Yeah, so what they filed was a notice of intent to file a motion to dismiss. So procedurally, you have to give the other side notice that, hey, I'm about to do this. Let's meet and confer. Let's talk amongst ourselves. Maybe we can reach an agreement before I go off and spend a bunch of the court's time deciding an issue if we're actually in agreement, if we can negotiate this out. So that's what they filed. I mean, it's not going to get dismissed. Everyone files a motion to dismiss. It's not going to. At least all the charges aren't going to. It is interesting that in the Binance CFTC matter, they're being charged with at least one token I'm aware of that the CFTC says is a commodity, that they're also being charged with as sale of unregistered securities by the SEC's case. I mean, technically, every security is also a commodity, so it's not like the end of the world. It's not like a got you, like, hey, look at the government's doing both. But it's very rare that you see that. So I think that's going to be something that's going to get raised, and it was raised in the Binance oral arguments as to the preliminary injunction in the SEC matter. They said to the court, hey, listen, Judge, I'm the same attorney that's going to be arguing the CFTC issue. And I'm about to fly to Chicago to argue about this thing that the CFTC is saying commodity, and that the SEC is sitting in front of you saying I should be enjoined from practicing my business because it's a security. So there's definitely going to be some overlap, and I think it puts Binance in a tricky position, having to litigate both these issues at the same time, because you're going to have to take positions that might help you in one matter but hurt you in another.
Johnny, anything to chime in?
No, he covered it. I mean, that's pretty standard. Motion to dismiss. They agreed. They didn't contest it, but we'll see a motion to dismiss. We'll see what their arguments are. I don't know what the deadline is on that.
I thought it was yesterday, but I could be wrong. But yeah, I saw that coming. So hopefully we'll see an outcome soon. Either way, whatever happens. But I do see Wolf has his hand up. Welcome, Wolf. What's going on?
Hi, Jess. Thanks for having me up. Just come up to say hi. Long time no see. How are you guys been doing?
Doing good. Can't complain.
So what's been happening with the original Crypto and Coffee, where you were the front person? Have you noticed how many followers you've been losing since then?
It's still Crypto and Coffee. It's still the community's still here. Nothing's changed. Just whoever's hosting the account. But thanks for coming by, Wolf. As always, we always appreciate having you by.
Thanks, Jess. Do you know what? I actually made a thread about coffee here the other day. I don't know if you have been seeing.
You want to pin it to the top?
Yeah, of course I can. I can see if I can do it. It's pretty insightful. I don't know if you saw it, but I hope you will check it out.
Yeah, pin it to the top. We always love stuff about coffee. But yeah. All right, so yeah, that was Binance and CFTC. So we'll see what happens with that motion to dismiss the claims against them. What else is going on? I know there was some scandalous headlines, I would say, about that crypto millionaire that was found in a suitcase, apparently. I know this is getting very dark. But from what I see...
By children. He was...
Oh my God.
Yeah, kids found him.
Yeah, from what I see, like, they might be using it, like, putting crypto in the title to kind of, like, stir the pot. But it seems like it might have been for some of his other business endeavors. But from what I know, his involvement in crypto had to do with some type of crypto trading firm that he had running out of Buenos Aires. So he was like a crypto. He was just an influencer on IG. And yeah, it's sad to see that would happen. So y'all gotta be scared.
I will say this real quick, that if you're on IG boasting about your gains, I'm not saying he earned anything of that. I'm not saying deserve any of that, but there's such a thing called OPSEC, like, keep your phones maybe as secure as possible, and including your life as well. And by the way, I lost all my crypto in the boating accident, and there's evidence in my timeline on Twitter that I lost it. There's proof of it, so don't worry about me. But I would say, like, people who flaunt, especially traders, like, we already know, like, I'm not saying all traders are the same, but there's a certain stereotype of the trader, the lavish lifestyle, is living in Buenos Aires. This is the last places, like Latin America, where you want to be, like, taunting people when their currency is going down like crazy. So I'm not saying you deserve it. I'm just saying you have to be smart sometimes.
I want to say too, Dal, I'm very poor. I have no major holdings. I'm not a target. But no, it's a good point. I've been in spaces, we all have, where people are, they're not bragging. They're just kind of talking, and they're excited about a big trade or big something they got. I remember I was in a space with some people, and this very nice lady that we was in the ship community was talking about how much money she made, and then was talking about what restaurant she was going to. Like, not a good thing to do in public if you want to keep that money. It's a crazy world. Be careful, everybody.
Yeah, I agree. Yeah. Go ahead, Tammy.
Oh, sorry, Jess. I was just going to say, you have to be so careful, and just go back to, I mean, years ago, like posting certain things, like you're on vacation, your house is empty, just easy things like that people just lose sight of and they forget. And guys, money is loud, wealth whispers. I used to have that in my bio, and it's so true. You don't need to be flaunting these things, because all you're doing is putting it out there, and there are people that may be disgruntled. They want what you have, and you're just setting yourself up. So just be so careful with that.
It's like wearing your ledger around your neck.
But it's a
great idea.
It's a typical IG, fake shit. Like, really, if somebody, all they post are pictures of fast cars and Rolex, the chances of them actually being wealthy is very slim. And, again, not endorsing what happened to this guy, but apparently he had left a note on his phone claiming that he had lost a lot of money investing in crypto. So if he held the bags, he was probably down. But yeah, I mean, it's just, we should know that by now, right? People don't put the reality out on social media, and especially on IG. Like, that's why I left Instagram. That shit's fake as fuck. But that's my personal opinion. But yeah.
Seriously, like I laughed when that was kind of big going on here for a while too. And I'm like, y'all, a Rolex is not a flex if it has to tell you when your 1 hour lunch hour is over. Okay, just stop with that.
Yeah, wealth whispers, right? Like, money and flexing is loud, and wealth whispers. And people have said, somebody asked me the other day, like, well, aren't you, you're so doxxed? And I was like, no. Doxing is the intentional, I know this isn't exactly the same, but the intentional, like, publishing of your home address to incite some type of action or physical violence. And like, it's very different to be like a public figure and put yourself out there, but actually, like, keep some things private. And that's a trick, to make sure. But that's one of the hardest things too, is people don't realize, as soon as they start to get like followers, and we're all in this attention economy, and then all of a sudden people are so interested in their lives. And I've said it before, like, there was TikTok followers that showed up at my house back in 2020. And I mean, thankfully, I'm very smart and like don't have anything of value, like, just sitting out. Most of it's in a safe. And but that wasn't really their intention. But just to remember that, like, social media, especially now, I had a conversation yesterday about the writer's strike and the actor's strike is making user generated content, meaning us, right? Like influencers and non-scripted actors, essentially, reality stars is what influencers are, way more popular, because there's no TV to watch. So we're going to be watching, and no TV to be filmed right now because of the strike. So, like, there's even more in the public eye for content creators. Let's not even call them influencers, but content creators, this type of thing that we're doing here. And so that does put more of a like target, especially if you're talking about money and what you have. And that's kind of like, half the NFT space is about showing off the stuff you have. And that can be fairly dangerous. Or if you go to like an event and you're wearing merch, right? It just literally puts a target on your back. So just always be really careful. No one's saying you're going to get, kidnapped and all of that, but there is a physical safety aspect to all of this.
One of the wealthiest people I know, real quick, drives a 2002 Honda Accord still to this day. And he owns multiple gravel yards and like commercial construction stuff. So the guy's definitely not hurting. And yeah, he goes, why would I spend money on something that's just going to depreciate immediately? And like, this car runs fine. And that dude is like stupid loaded. And yeah, exactly. Wealth whispers.
So we've had a lot of sage advice today. We've talked about the utopian vision of good legislation and how to not FOMO. And we've got, I think, Pauly launching a token. And so we're all being tested right now. And who's going to FOMO, even though we all know we shouldn't? Who's going to FOMO into that rug?
Silence. We'll keep that for the private discussion. Yeah, man, never a dull moment, I tell you. Yeah, and just speaking about wild things. Well, two quick things. One quick thing before I lose track, just some topics. We were talking about Instagram. Meta's reality labs, which is like the metaverse portion of Facebook, they reported $3.7 billion loss in Q2 of this year. So
shocking.
Yeah, shocking. And of course, Threads is dead. But what I wanted to say, like other crazy things, like people were degenning into the rat races. There was the hamster tokens. I even saw a roach race. Like, if this is not the bottom, then what the hell is? Like, I just don't understand what's happening. Like, I do agree that at some point when I see things like that, yes, we need regulation. Like, and we need PETA enforcement for these animals.
Ourselves, apparently.
Marble racing too. That was one you could, watch marbles race.
But yeah, hopefully that has died out since we have a short attention span. But in other news, WorldCoin, there was some videos floating around with a huge line at WorldCoin. So I guess I'll ask the panel, has anybody signed up, and is anybody planning on signing up and getting their eyeball scanned?
Oh.
I mean, come on. Like, this is the most unbelievable, like, it's not actually unbelievable, but I love the argument about like Apple Face ID and this, and I'm like, do you realize that they're taking a fucking picture of the back of your eyes that can like like, this is the most intrusive piece of technology that you can possibly understand. But also, if that's your jam and you want somebody to have that particular piece of your biological makeup, that is your choice. But like, it is absolutely not the same as Apple ID. Like, there is no technology whatsoever in your phone camera to take a picture of like the back of your iris, which can never be changed. Your face, you can change your face. You can, make a different face ID. You can delete it out of the system. Like, yeah, okay, not everything's completely deleted out of system, but it is certainly not taking a biological like blueprint of your body. Essentially, you can never change the back of your iris.
Yeah, go ahead, Brad.
Oh, sorry, I was gonna say like when like organ coin, where it'll just be back based on the organs you have, and like,
right.
It's insane how desperate people are getting in this bear.
What's up? What's up, Cryptic? I see you have your hand up, and I also see Daniel came up. I know he wants to chime in on this. He's a huge WorldCoin supporter.
Oh, wow. Okay. So last night in my spaces, we were talking about the WorldCoin, and I was genuinely curious. I went into like deep diving into their white paper, their page, and the video that I think you were talking about, how they're like going around the corner, that's not even in America. I was like looking at it, it was like stopping frames. That's in Asia Pacific. That has to be in Asia, because I saw signs where like, in Asia, like probably like some type of Chinese or something. So I was looking at it, it's like, man, that's bizarre. That's not here, but that's just gonna come over here. But the thing,
yeah, wasn't it like at the end of the line they were like kneeling on the ground? Like, why wouldn't it be in a building?
Right.
It didn't make any sense whatsoever.
And if you look at if you look carefully enough, you slow down the video, the stop signs are European, and that's not here in America. And it's like, oh, that's not there. That's a European. Lucky for me, I was in Europe. I could tell the difference. So that's all European. But what got me really interested was I think it was like a year ago. It was a year ago. I went to this event for down Denver and East Denver in Colorado. So I deal with like more like the XRP, XLM, and all those ISO things. And I was just generally curious. I wanted to try a different blockchain, see how they were doing things. So when I was there, I seen an eye scanner there on the area, and I was like, "What the hell?" Now looking at it, it's like, "Oh hell no! I'm only gonna touch that," because the simple thing. I was in the military for 9.5 years, and when I was on in the bases, when I deal with the local nationals, you guys scan their eyes because in case if they're like terrorists or something like that, you could tell, or if they're looking for someone. And I know how that technology works. And then if you use it in a malicious way, you're not gonna like avoid the system. That's a rare thing to do, like scanning an eyeball. The only way you're gonna replace that is just taking your eyes out and putting new ones. And how easy is that? Not too easy. But what got me curious about the technology itself, when I went to the white paper on their website, oh man, it really made me sad because it's basically, oh, this is the tool of humanity, and these are the wallets that considered to be called orbs, and by the wallet itself, it can give you ID. You can do NFTs, extra layer of security. It's built on Ethereum. It's a second layer token. It's a second layer token. So they even said like they're building a way to accumulate control in the economic system and towards to the page. It just literally says that. So like, I don't know, like a lot of people wants to do that, be my guess. But like if you're here early enough and there's like blockchain and crypto, you have a better advantage to avoid stuff like that and get away from that type of technology because you're an early adopter. But like maybe other people who doesn't have that same capabilities or have that same benefits, or people who are probably older, they don't care, or maybe people who are blind, they don't care either. So they might have this different options for them depending if they want to do things. But yeah, it's not my cup of tea.
Yeah, and even that company Clear, I travel a lot, and usually I'm running through airports, and there's a company Clear that scans your retina, and I was like, I'd rather miss my plane twice than have you have my eye scan ever. I have no idea where this stuff goes. Show me your servers. Where is that at? Who's getting access to that? And people just blindly, no pun intended, go up to these machines like, sure, scan my eyeballs just so I can, not make, if you get it. Like, it's the most ridiculous thing.
All right, let's get through these hands because I do have to wrap up soon. Go ahead, Dow.
Yeah, I think it's a tough one because just the name alone, like WorldCoin, like to me, I keep thinking it's like a bad conspiracy theory. Like, why would you name it WorldCoin? Sounds like you're about to take over or something. And the founder, right, if I'm right, is Sam Altman, the same founder for ChatGPT. So what Brooke is saying, I think is so important. Like, supposedly, your data is not stored on a server, supposedly. Now, if I'm a guy who is leading the effort in AI, and the one thing that AI need is more data, an insane amount of data from all around the world, and I'm going to tell you that I'm not going to use that data, I don't know, man. I don't know if I would trust it. So maybe he's telling the truth, but all the incentives are there for him to train his machines and his algorithm through this data. So I guess it's going to be something we have to talk about because the concept of identity, on-chain identity, is important. Like it would resolve so many issues that we're having. We just had a conversation on bills that are trying to tackle the issue of KYC and AML. And obviously there's some other alternative solutions like the ZK-based solutions, but there's nothing that really captured the imagination just yet in terms of here's a solution, here's a way to provide regulation without necessarily giving your data away to some third party or some centralized authority. So I think that question of identity, on-chain identity, is really important. So maybe it's a good way, at least to have that conversation. But yeah, the project itself, it's just hard to be bullish on that.
Great take. Yeah, I completely agree with you. Daniel, I know you wanted me to go scout out the local WorldCoin store, which ironically is in coffee shops in my area. So they're trying to bribe people through coffee, I see as well.
Yeah, when I saw the coffee place, I'm like, yeah, we're going to send Jazz to it. Now, I think it's interesting. I think we like to play that game that we're free, but no, we got God, right? Like the way it ends is the comedian said it. We've already been God for a while, for a long time, and the technology that we have right now, it's only been, except for just a few exceptions, it's only been innovated not for the good of the humanity, but the good of corporations. And AI is just another perfect example. You know, I heard some rumors they've been dumbing down the consumer AI and just using us for, again, for just feeding back into the corporate AI, which is nowhere, you know, we won't be even allowed to touch that. Doesn't matter how much of a monthly subscription you have. So, you know, it's funny that people think that we're pretty free. When you go to airports in China, you're scanned everywhere. Scanning your retina is just another tool. And yeah, I would say, yeah, why will anyone want to do that, right? And that's fine. You know, everybody's got an opinion. I'm not saying no. I'm not saying, hell no, I'm not going to scan my retina. Shit, they got everything on me. They got everything already. The very little privacy that I have is when I'm not connected to anything at all. When I am hiking and my phone doesn't fucking work. That's the privacy, the freedom that I have. Everywhere else, they got me. There's no reason for me to say, hell no, I'm not going to do this Retina, other than I just don't want to give my data to this one asshole, right, in particular, because I'm ready giving all of my data to a bunch of assholes everywhere. So I don't know. It's interesting. It's very, I don't know. It's a social experiment. So I'm just glad that I'm part of it. You know, like I can see it from. None of these orbs are close to my location, so it's not like I can go check it out. So that's why I wasn't asking you just to give your data to this one asshole in particular. But it'll be kind of fun to see that, take a video and kind of see, you know, what it's like from someone that I trust. I trust you, Jess. So, you know, it'll be fun to kind of see that perspective.
Yeah, I got my orange paint ready. I'm ready to go to the nearest WorldCoin facility and see what they got going on. I'm just kidding. I would never do that, but I'll try to check it out. I couldn't do it last night because you told me yesterday. I'm like, check it out before tomorrow morning. I'm like, and they close at 6, so I couldn't. And you told me like at 2. So I'll try to check it out before next week and report back with some updates for you guys. But I do see we have Smokin' up here. What's going on?
Hey, thank you for bringing me up, Jess. How is everybody doing? Sorry,
Doing good.
Good. I got off work late, so sorry I missed everything. I don't really know where to, like, I have so many things to say about this. I don't know where to step in, so I just want to give you a little of my perspective.
Only disclaimer that I was supposed to end at 12, so you got like 3 minutes. I can go another 5 to 10 minutes. So go ahead. Your floor is yours.
Nah, I'll be quick. Again, I don't know. I'm not gonna have an opinion on this because there's so much to say. But just a little background, you know, something to think about. I was deployed to Afghanistan, 2009 to 2010, and we were very much in the phase of win hearts and minds. So we weren't kicking in doors. We weren't trying to do malicious activities, at least in my company. There were bad guys that were American soldiers in my brigade. There were battalions around us that were dirty, and they had a very rough time there. But we lived on the road for the most part. Like, we packed all of our rucksacks and our bags on our trucks. We lived just like the people in that country. So we got a certain amount of level-headedness and respect from them. But there was a pivot point, like halfway through the deployment, where we got these boxes, and we would just like most of the time we were patrolling Highway 1. It's like a big circle that goes around the whole country, and we were in the southern half. We would patrol, and we would just stop sometimes and like pull over a group of people, and we would take these boxes and we would fingerprint them and scan them. And they didn't really tell us too much about it, but the goal or the idea was that this is a country with a language, with a spoken language. Like, there's so many dialects and so little schools, you can't really learn Pashto, which that's only one tribe, and it's the biggest tribe, but that's only one tribe. So you can't learn Pashto from a book because they don't read books. So whatever book you're reading is not going to be how they speak. So we had to, like, I was in a language program, so I had to learn from Pashtuns that were brought to America however they were, and were cool with us. They brought them in, and they tried to teach us how to speak. It was very difficult to learn and understand everything. But basically what I'm trying to say is, like, they had no infrastructure. Like, here, when you go to the doctors, they want to ID your driver's license, your social security number, shit like that. They don't have that over there. And there's a lot of third world countries or undeveloped or underdeveloped countries that don't have the same type of paper infrastructure that we have. And now we're in an inflection point where a lot of these third world countries can take decentralization and a lot of the big moves that we're trying to make, and they can just jump ahead of us. Like Africa, they're using their phones. They're using Nokia phones from 92 to process Bitcoin payments. And they have the ability to skip the whole paper process. And I feel like that scared our government, and that scared the people and the powers that be. So what we were trying to do over there, and we actually got an award for bio scanning the most people. And I always thought that was weird. Like, why are you giving us pats on the back for scanning these people? Like, it was meaningful to them. It meant a lot. It didn't mean a lot to attack and fight and do anything like that while we were in country, but they put a lot of weight behind getting the iris scans and getting the fingerprints, and it was very difficult to do, for health reasons, but they put a very large emphasis and a lot of money into this technology and into having us just stop and pull people over and scan them all, because that was the only database that they told us it was like to build their
Smoking. I'm sorry, but I need you to wrap it up. It's 12:04.
Okay, I just want you to know the American government has been highly invested in this in multiple ways for a long time. There is a reason for it. I don't know about WorldCoin, but bioscanning and iris scanning is a tech that they have wanted to push for a very long time for obvious reasons.
Thank you for sharing that. No, I mean, that's a good perspective to see it from like a different country. And I'm sorry to cut you off, but guys, when I tell you I gotta go, it's because I gotta go. I'm trying to let everybody chime in. Go ahead, Brooke. Go ahead, Brooke. But yeah, come earlier. I know I had to go early today, so I apologize for that. Go ahead, Brooke.
No, I can appreciate everything that you were saying, Smokin'. And, you know, the last thing is electricity can cook the dinner, and it can also cook the man. You can pick up a hammer and build a house, or you can bludgeon someone with it. So whether or not the tools are there for good or for evil, that is that's a human choice for each person to decide on their own. And this is why we have these conversations. So I just want everyone to remember that, like, there is no black or white. It isn't a straightforward answer, but you have to do the research yourself. Don't blindly walk up to something and get your iris scanned because or do whatever.
Yep, we'll see how that goes. Hopefully I can report back. Guys, I'm sorry, but I'm going to have to skip the outros. I hope everybody has a great week. It was a great conversation, but I do have something I have to do, and I'm already 5 minutes late. But thank you, everybody, for coming. I'll check you guys back next Friday. Actually, we have a space next Thursday with Frontier Finance. I'll make sure to put that out. And then Friday, we'll be back for Crypto and Coffee. So thanks to all the speakers and listeners, and I'll catch you guys around the timeline. Bye.